Welcome to Virtual Coffee with Dawn Rickabaugh, the Note Queen, where we talk about owner financing and notes. Financial solutions, one mom and pop to another.
So now, Ed, there's a chat from you, how to invest over the entire market. So since we're just chatting, you want to go there and chat about it?
Well, that's my question.
Yeah.
I mean, let's take the extreme example. And I know several people, both in person and kind of at the guru level, that have had this experience. They're rehabbers and they're good at it. And they're doing multiple properties at a time, making fabulous income. And then the market tanked in the 07, 08, 09 period, and they lost everything. The bank took back the properties. They couldn't sell them to cover their hard money loans, and they lost everything. And at least one of these guys lost his house and his marriage, and his whole life fell apart because he had put everything into the assumption that the market was going to stay good and he could just keep living this high lifestyle forever. And you mentioned the stock market earlier. I mean, every so often it tanks 50%. And that means you have to have 100% return to get back to where you were. And that takes years. And the older you get, the less time you have to pull that off. So my project that I'm thinking through right now is, how do you invest over the total market cycle? And whatever it is that I'm doing, and I've picked something that I think should be on the safer side, but it's the question I'm asking experienced investors.
But yeah, so that's a great question. You're not even talking about investing outside of your geographic. You're talking more about the different strategies that you can use as the market changes in your own backyard. Yes,
that works.
Okay, so then what's your idea? Let's hear it.
Well, as you know, I changed in the last year from making rehab loans to making landlord loans. Mm-hmm. And these are long-term loans at hard money rates. Right. There aren't very many deals that work, but when they do, it cash flows for me and for the landlord, and it improves property in the neighborhoods. And there's always something a little funky about the area. There's a railroad track nearby, or there's a rock quarry at the end of the block, or something. But they're high cash flowing properties. And I feel that if the market drops, that those properties have a lot farther, not very much distance left to fall. And that as people can't afford their mortgages, even if they're not losing their homes, there's going to be pressure downward that's going to increase rents and demand for those properties. Mm-hmm. So that's the gamble that I'm taking. I'm also holding cash to take advantage of opportunities that occur. But I'm just asking the question of experienced investors as I go around, and sometimes I get good answers and sometimes I don't. But I'm asking it this morning just to see what you have to say.
Yeah, anyone who's on the call that wants to speak to that, you can just think of this as a sort of informal mastermind. And, for me, I've been thinking about, I like your landlord idea, where you're taking longer positions. A lot of private money has a hard time. You get two groups of people. You got the short-term people that want to make loans and they get their money back inside of 2 years. They don't want to be locked up very long. And then you have the people that usually are willing to buy fully amortizing paper and go out 30 years with me if they need to, right? But they usually have a hard time cross-collateralizing or cross-pollinating with each other. So I try to get a lot of my short-term people to diversify and be willing to go a little bit longer with me. But I think what you're talking about is you got something in the middle that is sort of like your hard money thing, but your equity position is better. It's a tried and true property. Someone who's got invested a lot in it. Maybe you're 50 cents on the dollar, but you're willing to go maybe 5 years or 7 or 8 years instead of these 2-year short private money deals, and you're not going super long either. So
Well, I am going super long.
Oh, how long are you going on?
I'm doing a 25-year amortization or less.
Oh, wow. And what interest?
But I'm charging 14%.
And okay, well then in your market, the price point makes it so that makes sense for the landlord. They can still cash flow.
Sometimes. They're not every deal. There's a lot of deals in between what I do and what banks do that just don't get done.
Gotcha. So, well, I think it's a great niche. You can, it's a whole different exposure than the rehab flippers who, the story you told, you can get caught with your pants down. If the market turns, usually it turns pretty quick. So, I mean, for me, I'm like, okay, I'm only a small mom and pop operator anyway. We're a small family operated investment company doing both property and paper. At any given time, I've got maybe 2 rehabs going on, and just so if the market turns, super quick, I'm not going to be so exposed, and have too much leverage out there. Plus, when I buy something, now you're just talking about lending, but when I buy something, I have to have 2 or 3 valid exit strategies, so that, let's say I buy a flip or I go, okay, well, this should be a flip. There should be 40 to 60,000 easy in this as a flip. And I don't do a ton of it, so I'm not the most experienced person, but I go, well, if the market turns right before I get to the closing table, or before I get to marketing it, will it make sense as a regular rental? So I run my numbers. Okay, yes, I can rent it for this, and okay, and then could I own or carry it? Would that make sense? So I have to have 2 minimum, preferably 3 exit strategies that make sense financially, just in case, because I feel like we're in a very uncharted territory. I'm gonna go out there like a weirdo and say I don't even think the Federal Reserve will be functioning at some point. I don't think it'll last even 5 years. So I think we're going to be transitioning into a whole new system, which I'm glad. I absolutely hate the central banking system as it's conceived. It's a debt slavery system, and I'm reading a couple books to remind myself of how disgusted I am with our financial system. But who knows what's going to, the transition to something better, something asset backed or some other thing, even crypto. I don't know what it is going to be, whatever combination. You better just hunker down. That's my thing. Anytime I do something, it's not like I don't do things in the marketplace, but I'm careful. Like I'm going, okay, if everything stays the same, this is great. But if something changes, it still makes sense because of this or this that I can do with it. So to get back to your point, Ed, my comment, and then we'll open it up to other people to say something, is that I think we're at that point where it wouldn't surprise me, anytime that things could get, could turn around again, or we could have another sort of recession or crash to some degree. And so I'm done buying and holding. Like I've got enough. I don't want to buy and hold any more properties. And I'm still doing the note thing, but for me, I still want to leverage real estate and what I know how to do with it. So in my market, Ed, what I'm thinking of doing is just focusing a lot more on doing subject to deals, lease options, things, rental arbitrage, so I can rent something from someone, and then do a short-term rental business on top of it and create cash flow that way, but without me having to own the real estate, So I'm just thinking about switching to more of, of course, anything that comes across my desk that makes sense, I'm going to do it. But I'm just going to, going forward, be focusing more on sub-twos, rental arbitrage, lease option kind of strategies, just so that I can minimize my exposure to any downside, but still create cash flow, right?
You've been listening to Virtual Coffee with Dawn Rickabaugh. For more, please visit notequeen.com.